for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Product Education at Options Play. Thank you both for being here. Jessica, new highs. NVIDIA out of the park. Incredible. We're going for a winning week here. Not sure anybody expected that. Your thoughts on the market?
Absolutely. So happy to see you again, Nicole. NVIDIA had that blowout quarter, and we talk about AI all the time. And NVIDIA to me is that in school when you had group projects and you had somebody who was the leader and always took it over. That's what NVIDIA did. But it's telling us the demand for that AI narrative, and it supports that narrow-based rally. I definitely want to see it broadening out, and I think there is some weakness spots within the overall market. But what I'm hanging on to through this entire earnings season is we have 2 consecutive quarters of growth now. And post NVIDIA earnings, the expectations was 4% of earnings growth. We're at 10% now. So that's really positive for the overall earnings picture. And that tells me earnings have bottomed, and we don't really see that growth within recessionary periods.
I see. Okay, so at this point now, I'd love to take a look at your trades. You bring us Disney as the first name in focus. Why is that?
Absolutely. I think there's some magic coming back gaming world. And I love Taylor Swift and I'm a Swiftie. They had the Eras tour on Amazon Prime, but you could only rent it, and it went away after 2 days. The home for the Eras tour is actually going to be on the Disney platform, and that is a driving force, those Swifties, for the economy. So I think that could translate really positively into earnings. But if you think about gaming and the Swifties, that's a really diverse audience that you're bringing to that platform. So going to be very interesting to see. If we look at their latest earnings that they had, though, there is a shift to that promise of value, that clear path of profitability. That's extremely important. They have been cutting costs through their operations. It looks like they're going to even meet their goal of saving about $7.5 billion every year, which is really great. And they raised their dividend by 50%, and they're starting to pay it again. They announced the intention of buybacks of $3 billion, and they haven't done that, repurchase shares anyway, since 2018. So that looks really, really well from that thesis perspective. But fundamentally, 34 analysts cover Disney, 76% of them have a buy rating. That puts the average upside is about 116. That's about 8% of growth. It's trading net 13 times next year's earnings. Expects 3% revenue growth, which isn't too high, but that 23% EPS growth certainly looks promising from a valuation perspective. And I find it rather cheap, is the word I'd like to use.
I see. All right. So finding that there is value here. Your thoughts, Ben, on the chart of Disney?
Yeah, I can understand the bullish stance and the optimistic approach towards trading shares of DIS, because it's been a swift move to the upside, and we have seen a shift off the October lows. So it kind of all feeds into what Jessica was just talking about. Let's begin first and foremost with the move that we've seen this year. We've got an hourly candle chart. You can see consolidation, and then that high conviction move up that we saw. And then again, new area of value forming at a higher level. Basically, we're talking about, well, as you break it down, you can see again, a well-defined trend up this year off the January lows. That was down around that 86, $85, $90 level. We're talking from 91, we'll call it, recently up around 112. A vertical move up through 100 really stands out here, right? You get that high conviction move and then acceptance up around this newer upper area around 109. Simply put, that's exactly what the bulls want to see here. Let's step back. Let's move away from the hourly candle chart. I've got a 4-hour candle chart here, and this is another good example of a well-defined trend up with migration of value. We're talking from 82, currently in balance right now, and this is exactly what we look for, right? Because we always talk about a trend up, but that's all well and dandy to be able to identify, but we also want to look for tradable opportunities, and that's going to come in a trend environment to the upside, either a test of the lower extreme that holds or a breakout of this upper extreme, right? So the bulls are looking to participate in this trend up. If they get long here, well, they're going to be risking 97. They don't want to see it take out that key level that was established on the way up. But just kind of looking at a range that's forming around 109. And as you take a look, this is what I mentioned in terms of a shift, because we formed quite the bottom. We were trending lower, again, into the lows that we saw last year back in October, from, well, we're talking up above around 100, not what the bears were looking for as we took that key level out, because that trend lower got invalidated with this move up. So we're seeing, again, a very bullish pattern playing out here on multiple time frames, not only on that short-term time frame, but also, again, invalidating that long-term trend lower that we had seen off those lows from last fall.
And look, you're talking about the lows and highs, and I'm looking at some of the same from 78 to 112 for Disney. But when you look at this, I can't get over what happened in the last earnings. People were really pretty happy with what they heard from earnings season in the last round on the 8th. I think it was the 8th or so of February, where the stocks sort of shot up. I know it's since pulled back, but there was a lot of optimism too. Jessica, final thoughts?
Absolutely. There's certainly more optimism coming in. And I love bringing the charts in as well. And Ben, I really hope that was an intentional pun where you said it's swiftly moving to the upside. That was beautiful there.
See, for you, the Swiftie. Let's talk about NVIDIA. I mean, I almost feel like there are no words. Let's talk about NVIDIA. I mean, Jensen Huang taking this one and just, moving it to the next level. Your thoughts here, Jessica?
Yeah, I know there's been so much talk about NVIDIA, so perhaps the bullish thesis is absolutely there because it tells us the demand for AI, but they're also still expanding on that. AI inference contributes to nearly 40% of their AI computing mix. And AI inference is where you take the already trained models, and then they have the ability to take in new data sets and what they learned from and then apply it. So there's a whole nother leg for AI that we haven't even touched yet. There's another chip that they released February 13th, where it's actually available on Microsoft computers. You don't even need to connect to the internet. It will use your own data. And that's going to be a whole change in the AI narrative. And we didn't even see too much information on that on the earnings. Their data center is growing, but the next catalyst, which I think we're watching for NVIDIA, which will certainly send it higher, is GTC. It's their global AI conference for developers. They bring together engineers, researchers, IT professionals. That's going to be on March 18th. They're going to give us more insight. They may release more information. They're going to make something that's already at a euphoric state even more exciting. And the price target increases that came in post earnings made the valuation more attractive. It's still in the tiny bit upper 30s, but that's well below their 10-year average for forward-year PE ratios that tend to be in the 60s. So I think there's a lot more room to go. Yeah.
Yeah, and there's been a lot of talk about that PE ratio being somewhat reasonable in comparison to some of the other names. That being said, let's take a look here at the charts. Ben Lichtenstein, your thoughts, because I know Loop Capital, for example, I think they had a $1,200 target on this name.
Yeah, this stock has been just amazing, to say the least, right? And it's kind of checking off all the boxes for the technicians as well. Let's begin, again, with a more granular time frame. A look at the week that was. You can also see on this chart the big move that happened in reaction to earnings. So we go from a very kind of overlapping, rotational, low conviction environment into this high energy type trade where the market gets transitions from this balance phase to the imbalance phase. And then what we see is acceptance, right? 730, and then we kind of add to those gains. We're currently forming a bit of a range around this 810 level, just coming off the highs that we saw this week up around 824, and exactly what the bulls are looking for, right? This is a short-term chart, just looking at the week that was, 5-minute candles here. Let's take a step back. I want to show you what's going on. I've got a 4-hour candle chart here. We're going all the way back to October of last year. Stock was trading down around 390. We're talking off the lows from last fall, a well-defined trend up. 383-ish, we were the low bottoming out last fall. This week, a vertical move out of balance. So right now what's happening is we're seeking value higher, right? This is an area of value that we've recently transitioned out of. The bulls are hoping that we establish a new area of value at a higher level, basically supportive of that working assumption that we're trending higher, that value continues to move at higher and higher levels. Let's take another step back here into a daily candle chart. We're going all the way back to, again, the fall of 2022 now, and you can see another well-defined trend up from 127, recently just shy of 824, currently, again, as mentioned, in a vertical phase higher, Bulls are looking for that new area of value to form up above this range around 700. But look at this. You can really see, again, on the daily candles, that high conviction, higher highs, higher lows, high participation, energy. Again, checking off all the boxes here, Nicole.
I see. All right. I mean, it's just amazing. And the breakout after the earnings, certainly seeing in the vertical phase, as you said. Let's see, Jessica, your final thoughts on this one.
Yeah, I really think it's just getting started. The hype is real. We're seeing that translate into revenues. I do think, even though it's moving vertical, consolidation is something that is natural and happens. In the words of Jim Cramer, this is one that you hold and not necessarily trade too often.
I see. Okay, next up you have here Spotify, and they've had a lot of good news. They've launched their in-house music advisory agency recently. The stock's at new highs, year to date up over 30% already. Your thoughts on this?
Yeah, Spotify. So not as mega cap as the other ones, or as big really, but they're on a clear path to profitability. They're growing their ad revenue, they're reducing their operating expenses, their gross profits up 22% year over year. They utilize AI, and they've really invested into podcasting, which is really, really large and such a growing industry. And they're projected to break even by the end of this year from all of the investments that they've made within podcasting. And I think they actually might even do that earlier. Currently, I think that 250 mark where it's at is a little bit of a psychological place where we might perhaps find some resistance. Would love to hear Ben's thoughts on that naturally. But I really like the platform that they're offering. I think they're diversifying. They even added books as of late. So lots of room for the upside for Spotify with that clear path to profitability.
And I'm seeing some $300 targets, $290, a lot of buys, outperforms, one neutral from Piper Sandler, and the price target is $250, which is right around where it is. But most of them are higher than that at this point, so more buys. Tell me your thoughts on the technicals, Ben.
Yeah, definitely SPOT, not as big as the other majors and not attracting as much attention as the other two we looked at this week, but definitely in a very well-defined trend higher as well. And on the longer term, reversing a downtrend. So let's get right into it here. First, the 5-minute candle chart. You can see high conviction to the upside this week. We balanced a bit around Tuesday, Wednesday, around 237. We broke out again, and look, since then we've been mostly sideways around 244, recently attempting to get something going to the upside. But I think we're sort of just extending the range that we've been establishing, this wave pattern, overlapping and rotational. And as Jessica mentioned, this is very healthy, right? To see a market with conviction to the upside, then establish a new area of value at an upper level, it's a form of acceptance, simply put, versus rejection, exactly what the bulls are looking for. Take a step back, you're going to see another well-defined trend up. This is a daily candle chart, so we've added some time here going on back to 2022, the end of November, December, beginning of 2023. Look at this. From 75 in January of last year, this week to 251. Bulls are looking for a breakout now out of this area that's been forming around 244. They want to see a vertical move here and then a new area of value form at a higher level, continuing this staircase type pattern that's been playing to the upside, right? We talk about these how to establish trend. It's by looking at value. Which way is it moving? And in this instance, we're going all the way back on a weekly candle chart to November of 2020. And you can see off the highs that we saw in the beginning of 2021, value was moving lower. Look, the bears were cheering it on as we were breaking out below 105. We balanced out around 77. That's exactly what they were looking for. In fact, they wanted to see a new low get formed, and instead we start to bottom out. Look, trend lower got invalidated back above 105, so everything above that level has been very bullish. Again, taking a look at across multiple time frames, this is another stock here as we head into the end of the week. Spot, it looks like a long-term bulls here remain in charge.
Yeah, and as you said, I mean, the bears tried to give it a go, but it just really took off and invalidated that. Final thoughts here, Jessica and Skip.
Absolutely. That solid base is forming. I think from the overall market, something we really haven't discussed is we reached some resistance on the equal weight index, looking for that broader participation. So that's something that I would pay attention to from the broader markets, is larger participation. But overall, everything seems great thus far, Nicole.
Thank Thank you so much. Great to see you both today for the big three. Jessica Inskip of Options Play on her own, Ben Lichtenstein on the charts. Thank you both for the big three.